Good morning, everyone. Going to be doing a little bit of a pre-market analysis on Aussie and EU. And just gotta be looking at price action, right? The problem with today's and tomorrow's trading is that as we were expecting the week to start bullish to then turn bearish, exactly as happened. Previous week's high was taken, and then price aggressively and pretty rapidly in between the day, just the day, the 7th, right, from Tuesday to the 8th. So you can see price simply got to previous week's low, which means that from my point of view, at least, the target of the week has basically just already been mitigated, right, which could complicate the market a little bit for us. Because if we're looking to participate in that direction, we basically had the chance for just one day, which was on Tuesday. But, well, it is what it is. So problem as well now is that price could easily just consolidate, right? Retrace a bit without giving us much chance to actually participate because the market could be a little bit radical. Multiple things that could happen in the middle. So based ourselves on that, let's just analyze and see what we can get out of a little bit of a pre-market analysis. So we had this Fibonacci that we could be using. 50% is pretty much on that 50-minute order block, which I do like. Coincidence. Thing is that, of course, because of it's not that I'm gonna be looking into this area. I'm looking for lower time frame entries. I will actually do that, but just to paper trade, maybe, right? Because if a lower time frame entry happened, it doesn't really mean anything for me because that's just an order block, right? It does have for belly gaps and everything, but not for belly gaps based on the 5 steps. During London, we do have what seems to be an entry with this run sells liquidity. Hold on. Actually, it doesn't go below that, but it does go below this couple of equal lows, right? So we do have the run liquidity. Market shift could have been considered already this one. And then we have this entire for belly gap to use as to find entries. And maybe it wasn't triggered on the first move higher, then returns, triggers that entry in the lower time frame and causes that continuation, which actually gets all the way up to this high. It's definitely interesting. And now price is retracing onto this. We have other 5-minute order blocks as an example. Thing is also that on the 5-minute, right, price has taken buys of liquidity even in the 50-minute, and the 50-minute looks much better in my opinion. So what I'd prefer to see will be price just going as low as this, market shifting for belly gap and potential lower entries. Problem, of course, with that is that it's gonna take a lot of time, first of all. But second of all, that it could simply be a Judah swing, right? A little bit of a move lower, takes liquidity, which will be that swing low, and then continues going higher, right? And we will be caught in the wrong side of the market, which is not what we're intending to do. Okay, Aussie on the other hand had a little bit better price action, to be honest, because it created that range that takes liquidity, goes aggressively higher, and all of that. But it's pretty much the same mess now. It does have a... Does it go up? Yeah, it does. It does go barely above those highs, which is good. And above this high, which is the one that it definitely goes above it, right? And now we could theoretically be waiting for this market shift to later be looking for the entry inside this for belly gap. That's something that we could be waiting for. I don't like it too much because ideally we would have gone above that high a little bit more just to clearly see that run liquidity. But it's a little bit of a reversal. I would definitely like to see a consolidation, liquidity being taken, and then just the continuation lower. I do believe that it does make a good amount of sense. But price action is just messing both pairs right now. And honestly, keep it in mind that with the 5 steps, on Monday we had a trade on Aussie dollar that personally I would have not taken, as I've said multiple times. And on Tuesday we do have a very good trade as well that I would have taken, but as you know, I didn't. And basically those 2 trades would have allowed us to profit from this week. We're talking about, I mean, if I would have just taken the Tuesday's one, we're saying that it's a a 2% profit, right? That we already get out of the Tuesday. And then keep in mind that Monday has news, today doesn't, but Friday has news as well. It would have been more than enough for us to just quit the week, right? So something to always keep in mind, because if we're considering the ones that we've missed as well, then we understand that this week has been not filled with opportunities, but it has had more than enough, right? So, okay. Euro dollar is going to be a mess and it's going to be complicated. Aussie dollar could give us a loss in this one. The setup doesn't have much displacement, which I don't like to see. It does create a parabolic gap, tiny one, not very strong one, but well, it's there. Good market shift, good round liquidity, although it does create a couple of equal highs theoretically because it barely goes above this high, which I also don't like. And I partially prefer this run on liquidity to then change directions. And I guess we'll find that out soon enough. And we don't really have anything to use on the other side bullishly, if I can be honest. So it's gonna be a bit of a tricky situation, and probably won't be trading challenge for today, right? Because of course tomorrow I'm not trading NFP. Friday is something to just avoid the entire day. But at the time, I just don't feel like this is going to be a good opportunity overall. We'll see. We'll see, of course, if a lower time for entry shows up, then we'll participate on it. But yeah, we just need to give it a little bit more time. Okay, so we see price trading onto the fair value gap, barely mitigating the level. I don't really like when that happens, because there has been occasions on which it doesn't really matter, right? As an example, we will see now the displacement in the lower time frame, which is what we're seeing, the market shift, and the fair value gaps. Simple as that, right? If that were to happen, then great, I'd participate on it. Now, what has happened in the past is that this kind of setup on which the fair value gap is barely mitigated works, and other times on which it hasn't, right? So it's basically as usual, right? I think it has the same probability, although again, it's not something that I've really backtested or anything like that, because it's really specific scenarios that you really have to look for to find out, right? Because it doesn't tend to happen like this. Now, in the lower time frames, besides from the mitigation of the fair value gap, the clear displacement and everything, we do have this couple of equal highs, sorry, that has been taken as liquidity. Definitely like to see that as well. And well, yeah, I mean, I will participate on it. We already have everything that we need, except now we have everything that we need. We just need to wait for the execution, which I'm waiting for price to reach up to this, or at least get close to it, right? It could just drop, and we could execute it right now. I'm just waiting for price to get up there. I'm going to execute it right there and be done with it. Executed, not sure why I got spreads to execute that. 140, pretty low, doesn't really matter. We put the stop loss at 78, just right there. And target, we can go below this low. All right, for right about direction, this shouldn't be much of an issue. However, whenever we're taking lows, we'll definitely be looking into either taking partials or just closing the entire trade. Ideally, this would have been executed in between this or this fair value gaps, right? Which would have given us a much more precise entry, first of all, and second of all, a better risk to reward ratio, right? Because we're getting 2R all the way down to that, and with this entry, we would have gotten 2R basically around the 1R mark of this one, right? So there you can see the pretty big difference per se. I'm gonna remove orders and positions from here, put this, and that's pretty much it. Now we need to wait. I'm gonna put an alert on the 1R. I'm gonna put an alert above this high. Approximately should be taking a loss if the price reaches net. And let me delete this because we won't use nets. And also do keep in mind that if we still will be looking for the entry, and this fair gap is respected in the next few seconds, this would have been another area for us to execute, which means that we would have basically executed around the same levels, right? Ideally, again, we simply would have waited for that, but yeah, it is what it is. What do I have? 2 alerts in this? Oh, the fair gap, okay. Yeah. We'll keep it at that. Oh, and we have that tiny fair gap as well. That's actually what we would have gone for. Right, this one or that one, not this one anymore, right? Because this is the closest one in between the market shift line, right? So this is the closest one. This is a bit outside, but again, could have been executed on that just because of the, just in the case price decided to just mitigate that one and continue going lower, which is something that can happen. Or, yeah, that's pretty much it, really. So that's it. Gonna be coming back later on. We'll delete this one. I will keep it because price can easily return to that anyways. And we'll see how it develops. In the meantime, let me look at euro dollar, which has absolutely nothing. GBP dollar, which has, well, maybe had something. No, not really, because if we took liquidity to the left and we use this as a market shift, which actually we should have used this one, we don't have a fair gap. Or even using this low here, we don't have a fair gap to use, so there's nothing on that side. And we have pretty much nothing. We do have a tiny bit of a wrong liquidity here, fair gap there that happened through London, probably bullish entries. Nothing that I can participate on though. Interested to see your dollar trading into this order block. That's pretty much it for now. Gonna come back at the 1 hour. And how am I this week? I missed out on Mondays, missed out on Tuesdays, took a loss on Wednesday. So today is the breaker, right? Because today is the last day of the week, basically. Might be looking for a 1 hour, getting me out of the loss. Really, if we get to the 1 hour, might go for that. Not sure yet, right? Simply to recover from the loss. That'll be pretty much it, right? Also, as my target is somewhat large, problem could be, of course, price just going against us, just changing direction and going against us. And if that were to happen, well, there's nothing that we can do. But yeah. But again, if it would have been executed from here, we're saying that 2 hours around these levels, right? Which means that none of these lows that are going to be taken in the meantime are going to be much of a worry for us, right? Because we're going to be out pretty soon. This one, though, we'll see, right? We'll definitely see. And yeah, that's pretty much it for now. Gonna allow it to do whatever it needs to and come back in the next few minutes. Well, I think 2 times this has happened already, on which I have a trade on Aussie, and euro dollar goes in the direction of what I'm expecting that Aussie trade to go for, while Aussie dollar is not moving too much, right? So we executed around 725, and as you can see at 725 here, we had a pretty nice drop, right? We can see a couple very bearish candles. However, if we look at Aussie from 725, we had 2 good candles, right? We're not going to say that they're bad. A little bit of a retracement, another move lower that doesn't really get too much, and that's pretty much it, right? It's a bit of a shame. I'm still in the trade, right? As I mentioned through the Telegram, I'm still in the trade with the full 1% risk. And I guess we will find out in the next few minutes if this will hold or not. It could have reached into, remember that we had the higher fair gaps, right? It has definitely reached into those now, right? It could have gone for that inefficiency before moving forward to the downside, right? Personally, I don't really see a reason for price to actually go above this high, right? I do believe that there's not much room for price to actually get above this high and then continue going lower. But well, maybe sells that liquidity, buys that liquidity, continuation lower. That's something that could happen. But well, at the time, I'm interested in seeing this alert being triggered. And whenever that happens, I'm definitely moving my stop loss to break even, or maybe just closing full positions, right? If it would have executed up here, would have been a much better entry. But to be honest, after all of this, I would have not liked seeing price get up there, right? To be completely fair and square, right? Euro dollar, on the other hand, we could say the next and be a bit aggressive about that. We have the raw liquidity above that high, price going aggressively to the downside, and oh, actually it doesn't break that low. No, okay, so not even in that sense we could be trying to buy. We do have that 15-minute order block, although the low was broken, so I don't think price can actually do that. I don't think it should be breaking the low of the order block for us to consider it as valid. So for me, this is not really a thing anymore, unless we could be looking into other order blocks, such as this one, which was mitigated once already and caused a pretty nice continuation. Maybe that's what's happening right now. Again, it's just to see what happens with order blocks. It's something that I've been doing for the past few weeks, right? Because I do like order blocks. I do believe that there's something that we could be using. But it's just something that I prefer giving them a little bit of time, you know, looking at what they do, how they do it, and if later on I can spot something that continues to happen over and over with order blocks, then that's something that I could try to take advantage of. Maybe a pattern that repeats like the 5 steps, right? That'd be that'd be ideal. Besides from that, all that I personally can do now is just wait and see what happens with this one. And being fully honest, right, if we go to the 5-minute on Aussie, in the next 3 minutes, assuming that this candle doesn't cover the full fair value gap, then we could be looking for bullish opportunities as well, right? Which, based on the power of 3, because of the kills on open, that could make a little bit of sense. But price action is very compressed, right? Barely takes a little bit of liquidity, which of course we have the liquidity to the left as well. Causes a market shift. This is a weak swing high, but it is a swing high that we can consider as a market shift, so it's there, right? And the displacement is definitely there, right? We can see that aggression, but of course the fair value gap should hold for us to consider this as a theoretically valid opportunity, right? And yeah, that's pretty much it. What I was actually going for is that we still have a lot of time ahead of this session, but what I'm thinking is that if this trade fails, right, I'll just leave, right? Simple as that, because I didn't go to the gym early in the morning as I was actually hoping to do. And I think that if I leave before 8:30, I'm gonna be good in time overall. But I'm still thinking about it, right? We have some time to decide that, but yeah, it's gonna be a bit difficult. And yeah, the overall problem is that Aussie didn't fall while Euro dollar was, and now Euro dollar also has, between a lot of course, right, reasons to go higher, which is the order block, the overall direction that we were seeing through London, and the power of 3. And Aussie to go lower, well, the run on liquidity is definitely something that we can use. The fair value gap, of course, at 5 steps, right? That's already a pretty good enough reason for us to be looking for sales. And yeah, I guess we'll find out in the next few minutes if we get something out of this or not. Whenever this alert is triggered, I'll come back and do whatever I feel like doing in the moment. Probably full close to get back up into break even, or for the week overall. Although I need 1.3R, do keep that in mind. And which I do think I get it below that low, don't I? Oh no, we're not getting it below that low yet. Okay. But yeah, I guess that's all that I really want to say. I'll be coming back in the next few minutes. I'm not going to be looking for buys, right? I will share the analysis about that on Telegram, because it was something that could happen, but it's just not something that I'll participate on. All right, so we're having a pretty good reaction. We're having a pretty good reaction bullishly. And even this little bit of a reaction here, let me delete this so we can see it a bit more clear. Even this little bit of a reaction here is something that basically creates liquidity for price to both to take, and also it will create that swing high that can be used as a market shift. So the lower time frame is very convincing, right? Very convincing. And interesting closing at break even. I'm gonna keep the trade open, just respect the rules of just allowing the trades to do whatever they. Oh, I'm sorry, I knocked out the mic. Let me copy the stop loss, just in the case I decide to take this. But I don't think the lower time frames are enough to just go for the buy, right? The higher time frames are just a bit of a mess, so we'll just avoid this completely. As I said earlier, I don't want to look for buys. The direction is okay because, well, through London we did have that, but based on the price action that we have right now, the sells have a little bit better price action than the buys, so we'll just completely avoid this. And it's an okay round liquidity. Yeah, just gonna allow it to do for price to do whatever it needs to, and we'll come back in a couple more minutes. And there it goes. A loss that we basically avoid on the bullish side by basically trusting the direction that we already had. I'm not saying that this will now drop 1,000 pips as I would like it, as I would like to see it do, but well, if it does, great. And what I'm gonna do is set my take profit at the 1.5R. So I enter, let me replace that sell at 140. And 178 was that, and 1.5 is right here, which is the bribe. So 66,082. 66, let me just copy it, otherwise it would mess up. And that's all. I mean, the 5 steps, it's a little bit of a shame that it took as much time as it did for it to work, right? The only thing that I don't like. And stop loss is moved at break even, which is a little bit below 140. We'll see if it holds due to the aggression. I would like to see it just get into the take profit. Now, you know what? My stop loss is going to be above the high, because price can retrace a bit higher and simply continue going lower. And that will make it around a 0.5% loss instead of a full loss. Well, actually a little bit more than half, 0.75, something like that. But yeah, happy that we were able to avoid that loss on the buy side. And at this point, I should move my stop loss to break even, right? It's just something that I understand that price could retrace, mitigate order block, fair value gap, wherever it is, to then continue going lower, or it will use the sell side liquidity to simply continue going higher, right? Those are the two scenarios that I can imagine. And also keep in mind that price has now taken buy side liquidity, aggressively lower market shift, and fair value gaps that price could trade into and continue going lower. I mean, we have a step 4, and well, now with this price action 5, right? Without the step 1, 2, and 3, because those already gave us step 4, which is what we're currently into. But yeah, just wanted to mention that. Yeah. If it would have been executed, let me actually check that. If we executed the entry here, as we could have, it does get to the 2R. Okay, so that's worth noting. 2R right there, although maybe we would have gone for a little bit more to cover the spreads, not the spreads, sorry, the commissions, which is adding 3 ticks more. But a bit tricky, Okay, well, I'm not going to spend here the next minutes to see if we get a half a loss, or, well, again, a little bit more than half a loss, or a take profit. I'm simply gonna get out of the charts and receive the alert of the, oh, well, actually I didn't place it at the, no, I didn't. Okay, so 681 should take us out. Yeah, take profit hit. And my stop loss is at 163, so 160 should be more than enough to trigger us out. Stop loss. I guess we'll find out. Remember that that's not my execution. Forgot to change it back. Something like that. Cool. Well, that's pretty much it. We'll come back later. Probably this will be the end of the video, and then I'll do a post-market analysis or something like that. So we'll leave it at this for now, and I'll come back later. Hello everyone. Good afternoon. I hope the mic sounds well. We're going to be doing a little bit of a post-market analysis to add to this video, right? And I kind of want to do it only on Aussie because I don't believe we had much on Euro. No, I don't think we had much on Aussie either, but oh, it's the same. It's the same chart. I thought it was a bit weird. Where were the news here? Okay. So this order block ended up being something, at least. But yeah, with the 5 steps, I think the only trade that happened was that one. Oh, actually, after the news, we do have this. Literally after the news. We'll analyze that and see if there's actually something. But let's go for this bit of a trade, which was, as I said, pure luck. Because this was just a mess, honestly. And we have. It's actually completely unnecessary to draw. So, 5 steps. Remember that it is around stops, market shift with a fair value gap at the very least. And later on, price traded into that fair value gap, giving us lower time frame confluences, which is just a market shift, and the fair value gap as well. Right, pretty much what we're looking for is that. So we're gonna look at it before the news, and I'm going to start by saying, I think I did say it at the beginning of the video, right? It's a bit of a messy price action because of the fact that price, well, actually, on Aussie we don't really have that. The fact that at the previous week's high was taken and previous week's low was taken as well, and that's pretty much what we could have used as a target overall, right, for the entire week, which could make price to do this. Because if we look at it from a 1 hour perspective, price just ranged throughout almost the entire session, except after and during the news, right? And then it moved very little more, right? It just moved a bit higher, went for this high, took the liquidity, and now is trading a bit lower. So it was very messy, partially, because we get this range, and I was actually more interested in the buys on, well, both pairs, really. Due to the fact that if you think about it, we have a run buys of liquidity, run and sells of liquidity, the potential market shift, right? Or maybe even lower if we had clear displacement, and of course it happened through the kill zone. And what ends up happening is that we don't really see much impulse, much aggression when that happens, and there's no clear fair value gap, neither on the 5 or the 15, that we could have utilized during the near kill zone, right? On the other hand, we have a pretty clear high, which is taken, move lower, not very aggressive, but it does create a fair value gap. The price traced back into after market shift has happened. And if we have the lower time for confluences, then there's not much else than to take it, right? Now, of course, I need to clarify, and I don't think I actually need to clarify this because it's the video really shows it, how this was executed. But as you can see here, this is tapped by the wicks at the low level, and then price returns, takes those couple of equal highs. Again, it's equal highs in the 1 minute, so it's not really that strong per se. It's basically probably just a wick on the 5 minute, and then the aggressive move lower. That generates another market shift and another fair value gap that could have led to an even better entry, right? Which is, it was discussed, right? It was discussed through the video when we were analyzing it, or maybe not, don't remember. Thing is that if executed properly, the execution should have happened here on, well, we don't have a fair value gap in between these 3 candles, but I think we did have one. It's just that with replay, it changes the wicks. Thing is that let's assume that executed properly, this would have been our trigger, right? Our level of entry. 5 ticks for stop loss for spreads, and just in case price goes up by 1 or 2 ticks. And just simply going below the low, we're already getting 2R. Now, the problem if we would have actually executed it like this is that we, at this point, when price is here, we already have 1.5R, which for me personally, it is already the point in which I move my stop loss to break even, or maybe even close the trade as it happened today with my actual execution, right? But thing is that being executed properly, we could have gotten, I think that's the peak, right? Yeah, that's definitely the peak. It peaks at over 3R. Actually, it gets barely to 3R, right? But well, it gets there, which is somewhat okay. Which is something, right? Now, how was it executed? A little bit impatiently at 140. Which was an overall good execution with a 7-tick higher entry just for spreads, and was closed a little bit above this because I remember that I said that my target was 82 I think I threw it there. Yeah. What ended up happening is that I was not receiving the alert of the take profit. I'm actually gonna, yeah, let me check if I can take a screenshot of that. I was actually doing something else, right? Just minding my own business while knowing that there was an entry working in my direction, as far as I knew. And what I basically had in mind is that the alert was gonna get triggered, and that's pretty much it, you know? Thing is that it got literally, what, a tick or two, and then completely changed its direction. And when I got back into the charts, this is where it was. And basically 2 minutes later, looked back again, thinking that probably we are already getting close to that stop loss. And although I moved it above this high, 163 it was, yeah, above this stop loss, this high. And it was around here, so it was closed at the price of 0.97. So let me screenshot of that. 0.97. Oh, that's awful. Ooh, very awful. Closed at 0.97 right there. That's the close as far as I'm aware. I think so. So from 140, as we said, stop loss was at 163. That's why it says that it was at 163, and closed at well, take profit, as you can see there, it was at 82, sorry, and closed at 0.97, right, which is a few ticks higher. That again, it was because a little bit of psychology, right, a bit higher than supposed, giving me a 1.13, not a 1.5, right? But 1.13 should be 220, but I got 270, so maybe with spreads or something, I don't know. I got 270. Thing is that basically ended the week on break even with the loss that I took on Wednesday. The buy that I would have taken on Tuesday would have given me an extra 2% theoretically if I would have allowed it to run all the way down to 2R, which I find probable. Let's just call it probable. And that'll be pretty much it for that week, for this week, sorry. Tomorrow is NFT Friday, so I'm not even counting on that one. The thing is that we have the run of buys at liquidity, the market shift, the fair value gap, price trace back into it. Oh, it actually shows differently here. Well, you can see in the live recording that it was like this, right? And the entry works out pretty well. We got lucky again, because if I was looking for 2R and I was pretty convinced on the sell side, as you can see, we were able to avoid the buys and everything. If I'm as convinced as I am for the sell side, I'm very likely going to allow it to run to 2R, which was somewhere around, well, actually it was down below this low, right? Which makes sense for price to take if the direction is going to be bearish. However, it is a low that will took sell-side liquidity, so it is something a little bit complicated to go against, right? So yeah, definitely worth keeping in mind, I'd say. And I think that's pretty much it, really. After that, we got the news, which bit of a shame, but well, it is what it is. They were medium impact news, which kind of surprised me, if I can be honest. And let me see if I actually have the steps here or not. I don't see a market shift. This is the market shift, and even the one to the left happens as well at the same time, which gives us this and this fair value gap. So theoretically, it could have been executed here. Since there are no fair value gaps unmitigated below this swing low, theoretically, we could have used this. I have found myself in situations on which this could be my stop loss, and I've never used it. So as an example, even if I was thinking of taking this trade, I would have not gone for this stop loss, and basically I would have avoided the entry at all, because this stop loss makes no sense, right? And of course, what we have... Oh, no, sorry, the news had already happened. Never mind. It does get pretty quickly to the 2R. I don't know if it gets further than that. And it doesn't. Okay, well, more than 2R that we could have got. Personally, would have gone for just a 2R. Oh, well, it is what it is. Let's go to that euro dollar. Let's see if it actually gave something. And if so, how? So price trace onto the fair value gap. Market shift on this on a bit of a swing high. Fair value gap. And right there. Theoretically, entries should be 2 ticks higher when buying for spreads, at least on euro dollar. And if we're going just above this high, that's a bit of an issue, right? Because we're getting only 1.3R. We're going above this high. Still a bit of an issue, but we're getting 1.7, so it's something a little more feasible. I think it's the word that I'm thinking on. I'm not sure if that's even a word. And does it get to the 2R? Let's actually draw it to 2R, see if it actually gets there. I think it's a bit lower than that, but we'll see. Okay, definitely gets there. We would have had to avoid these 2 potential break-evens, right? With buys, price has to actually get through the level to get us out on break-even, not as on sells as that can be close to it and spreads will take us out. The buys has to again trade through it, and in this case it doesn't, so I don't think we would have taken a break-even on that one. But yeah, it is what it is. Could have been a good entry with the 5 steps. Sadly, with news, I wouldn't really participate on it. And well, that's one of the reasons why I just completely skipped the market after the news occurred, which I was not expecting them to be as aggressive as they were. And I was pretty happy to be able to close that trade before the news happened, although theoretically should have been taken out automatically by the take profit. But we never know that, to be honest, because it could have easily just skipped our take profit. It is something that could happen. So I think that's... I bumped the mic, sorry. I really need to get this sorted. I think that's pretty much it. I think it was a pretty boring video. I'm a bit tired, to be honest. And that's all that I really wanted to talk about. Hope you enjoyed. Hope this was helpful in any way possible, the live execution and analysis. And yeah, be talking to you tomorrow. Actually, on the weekend tomorrow. Likely not.